The Bank of Japan signals an upward shift in interest rates, boosting the yen and spooking global equities. Stocks slip, with metals and realty seeing sharp cuts, while healthcare and banks fare better.
Reliance Retail Ventures announces a plan to trim holding in Just Dial to meet minimum public shareholding norms, as do promoters of Sterling and Wilson. Meanwhile, promoters of Dabur likely sold shares via block deals.
Hinduja Global Solutions offers to buy back a chunk of shares at a hefty premium, while IRB Infrastructure is set to consider a stock split, even as Ramco Systems eyes a fundraise.
The SEBI board is set to meet today and likely to review the buyback panel's recommendations for phasing out open market buybacks while boosting the size of tender offers.
Hello and welcome to a halftime report. I'm Ekta Batra. With me is Sonal Bhutra in the Mumbai studio, and we have Mangalam Malu joining in from the Delhi studio. Mangalam, well, you definitely have better weather than us, but the weather is not great for the Indian markets at this point in time. The global markets have definitely spooked sentiment at this point. So after a good day in yesterday's trading session, we haven't managed to sustain that kind of optimism today. The steps by the Bank of Japan, as well as the overall fear of a global recession, seems to be weighing. So as of now, yes, there's no Santa Claus rally in sight. Let's see whether there's any kind of movement in the second half of the trading session. As of now, we have 49 stocks which are in the red out of 50 stocks in the Nifty. Hi, Sonal.
Hey Ekta, good morning. Good afternoon actually. Hey Mangalam, good afternoon. Well, you rightly said there is no Santa Claus rally that is in sight today, and the mid-cap index, that is the one which is underperforming. This has been a part of the market which has continuously been underperforming the benchmark, so to say, 1% down in the mid-cap index. However, there are pockets which are doing really well. Sugar rally continues. We have the fertilizer space which continues to do well. So yes, there are pockets which are doing well, but of course, the global updates that we've been getting, that is something which is putting a lot of pressure on the Indian markets as well. After yesterday's rally, there's a lot of profit taking that we are seeing today, but remains to be seen which way things will go. Hey Mangla.
Yes, good afternoon. And Ekta said there is better weather there, but what good use is good weather when you can't see anything out here, right? So, well, we have both our pros and cons, but at the same time, for the market, it's interesting the way, the metal stocks are underperforming. The one pack that I'll be looking at right now is the IT pack, because when all these uncertainties happen and we see some strengthening in foreign currencies, etc., the IT pack tends to see a bit of an outperformance. Of course, that wasn't the case to be, because global growth concerns led that sector to underperform in this year. So the question is that after this underperformance, can we see some recovery there? As we speak, TCS is one of the stocks which has recovered from the lows and now moved into the green. Will we see that for other stocks or not is the big question. But like you all pointed out, the mid-cap index is where the most of the brunt is right now. They've been bearing 2,000 stocks in the red for just about 900 in the green. And the number of green stocks are actually declining, even as the number of stocks in the red are only increasing. We're seeing some weakness. The question is, where do we go from here? The 50-day moving average of the Nifty is just about 100 odd points from here on. So will that be a support or not? The Nifty Bank, however, is below the 20-day moving average. Back to you guys.
Okay, all right. So that is the market setup, but let's get sector specific and talk about more themes now. Indian real estate sector recorded private equity investments of $5.1 billion in 2022, according to the latest report from property consultancy Knight Frank. Knight Frank report suggests that despite recessionary concerns, PE investments in Indian real estate assets provided favorable investment avenue. To discuss more on this, we are now joined by Gulam Zia, who is the Senior Executive Director at Knight Frank. Gulam, good afternoon. Thanks a lot for joining us. Well, an interesting report, but of course we have seen a decline on a YOY basis because of the recessionary environment that the report suggests as well. What are you seeing here? Where is the maximum contribution coming in from? And going forward, do you expect more pressure or more weakness in investments because of the environment that we are in?
Okay, the first part of your question is about where do we see the action coming in from? And that is actually the interest in office market, which has been, in spite of whatever is happening from the work from home to global concerns, etc., the investment in office market in real estate continued to thrive. It's almost about 50%, about 45 odd percent of the investment, 6.2 billion that you're talking about, has come into commercial space. So commercial space is thriving. Residential has been shrinking for last half a decade. The share of residential is nominal. Warehousing has started shooting up and doing a great performance. In fact, that's one sector where the performance has improved in last 2-3 years, including last year. So overall, these are 2-3 key sectors. Retail as a sector, in any case, is not really a very regular sector. If a bulk deal happens, you do see a jump on retail investment. Otherwise, it remains very, very low. So key sectors, office sector is the biggest one contributing. Second is warehousing. Residential, as I said, is a nominal share of the overall pie. However, the second part that you spoke about is how do we see the future? Well, the concerns are looming large. So while we spoke about good amounts of capital flowing in real estate in 2022, 23, we'll have to really wait and watch how the global scenario is opening up, whether we call it recessionary trends or the war concerns, etc. Even office market is going to see some concerns. So while warehousing may continue to perform, overall concerns shall remain for the coming year.
Okay. Ghulam, hi, welcome to the show. Well, it has been a great year in terms of PE investments, like you mentioned, especially for the entire commercial warehousing segment. But it's actually declined on an absolute basis as compared to 2021, correct? We were at around $6.2 billion in 2021. That came down to $5.5 billion or thereabout in 2022. Based on the headwinds that you're estimating, are you predicting that it could be lower than this $5 billion in terms of PE investments going into 2023? What is your absolute value that you're estimating at this point?
The problem of that is, if I look at last 10, 11 years trend, there was a time when we really peaked out at about 7.8 billion, I think somewhere in 2016 or so. Thereafter, while COVID did bring in a huge reduction in the private equity fund coming in, but last 2 years have been good. So 22, while we're looking at about 15-17% of a reduction over 21, but that said, in spite of last 6-7 months of continuous recessionary environment all over the world, this amount has also come in largely in the last quarter of the current year. And that is also something which is giving us some comfort that whatever is happening, while the investment scenario all over the world is also equally bleak, perhaps there is some silver lining in investing in India because of our own situation has not been as bad as the global environment. So that is giving us some comfort that in spite of whatever is happening, the investment shall look forward, the investors shall look forward to India as a key market to continue. And because a lot of other investment avenues are drying up, India shall remain a beneficiary of that. So it's very difficult to give an exact number, but we are assuming next quarter or two. After that, I would say next year's quarter 3 and 4 will give us a huge boost. And that perhaps would be equal to where we are or even go up in the coming year. So in spite of all the tailwinds or all the headwinds, etc., we are still looking at a positive trend emerging for India specific.
Right, take that point, Ghulam. I was just looking at the data that your report has provided, and just on an absolute arithmetic, calculation, it turns out that the average deal size was the highest that we've seen in 2022 as compared to the previous years. If you just take a look at the number of deals and, divide the value by those number of deals itself. Could you give us some more color on the qualitative aspects of these deals in the PE? How much of that was stressed assets sale? How much of that in terms of valuation was higher than the previous average valuation metrics, etc.? What are the kind of returns, yields that investors are looking at because it's commercial and warehousing which is doing much better?
Let me start answering the last part of your question. What kind of yields are happening? In fact, one thing which is emerging pretty clearly, that the yields have started inching up. Previous years, it was actually closer to 6.5% kind of a yield was happening. But in last year and a half or two, we've been looking at it actually either closing into 8 or even crossing 8. And 8% of a yield was, say about 2 years back, was unheard of. But that's what is happening. Even the established big players are now looking at closer to 8 or beyond 8 kind of a yield. So that's very clearly a trend that has emerged in last couple of months, number one. Number two, your question about the deal sizes. What really happens is every year when we see 1 or 2 large deals, that number goes haywire. Last year, we did see a lot of deals of perhaps almost the same size, not much big investment hasn't really happened. These are mid-sized ones spread over all over the year. and that's what was because was showing the high number of deals that we are looking at. And that trend shall remain, because I can't read much of a trend in that, because like as I said earlier, a retail investment, one or two large malls sold may have one deal worth of a couple of, at least about 150, 200 millions. Each of those deals can actually change the whole scenario. And because residential remains a fraction of overall investment, residential is one sector where you see small investments coming in. Office sector continues to be driven by large deals. And one part of your question was, how do we see the future of the office transactions or yields? As I said, yields are already shrinking. Office transactions shall continue because we, at the same time, while we're talking about capital investment, next couple of days we shall have our next report on office sector for the whole year. And that also is looking pretty promising. We are, while looking at huge concerns, we are looking at good transactions happening in office sector as well.
Okay, Gulam, thank you so much for joining us and giving us a perspective as to what's happening as far as the PE funding in the real estate sector is concerned. It was a pleasure speaking with you. But to the big story of the morning, the Bank of Japan shocked global financial markets by increasing the cap on the 10-year yield from 0.25% to 0.5%, and Asian equities fell and the yen strengthened after the announcement. Lata is joining us with more details and more about the sudden announcement from the Bank of Japan. Lata?
Well, this is absolutely a bolt from the blue because the BOJ Governor Kuroda had even a few weeks ago said that he would not turn hawkish and that increasing the cap would tantamount to a rate hike. But that's exactly what they have done. The BOJ, just for information, has been controlling the yields along the curve, and they were controlling the 10-year yield at 0.25%. Today, they said they will allow it to rise up to 0.5%. Now, basically, that's doubling the cap. And this has led to a rise in yields and therefore the strengthening of the yen to 133. It was, you required 137 to buy a dollar. Now you need only 133 yen to buy a dollar. That's the level of strengthening that has happened. Yields in the Japanese market have also gone up. But basically, world over, this is seen as one more central bank getting hawkish. And therefore, it has resulted in risk aversion in all financial assets. So equities all across Asia have weakened, and there is a readjustment in the currencies. Many people were using yen as a currency, as a carry currency. You could borrow cheap in yen. Now you can't. So they're removing bets on other financial assets. It's very confusing because the BOJ governor is now saying that he sees the inflation receding. Actually, Japan's inflation now at 1.99 or almost 2% is the highest since 2014. So this was seen as a hawkish move because of that inflation. But now he says that the Japanese reaction is more to volatility abroad, which was ruining the functionality within the country, and that he sees inflation falling. So there are a bit of contradictory statements. They have not changed their short-term rates, which remain at minus 0.1. They have also said that they will buy more bonds. They were buying 7.3 trillion yen of government bonds every month. Now they are going to buy 9 trillion. So that actually is a liquidity infusing or an easing action, but it's coming along with a very, very hawkish action of allowing yields to rise. So the market is still coming to terms. They basically see the move as Japan exiting its loose monetary policy, or at least turning a little more hawkish. At the moment, that is the understanding of what Japan has done, in spite of the statements that are coming from the BOJ, which appears to be to smooth ruffled feathers. As you can see, the yen is still very strong.
Okay, all right, Lata, thanks very much for that. And like you mentioned, it is risk aversion because we have the Nikkei, which is down over 2% and sustaining those losses since the piece of news came out earlier this morning. Time for a short break. On the other side, we'll be talking to Vimal Kejriwal of KEC International to discuss their new order wins. Stay tuned.
2 साल में रेट रॉकेट 100%।
क्या भाई साहब, गेट सही प्राइस ट्रेंड्स at 99acres.com। घर लेना हो या बेचना, एक्सपर्ट से ही पूछना। 99acres.com।
वाह, अब आ रहे हो इंस्पेक्शन के लिए? 3 घंटे पहले बोला था कि मैम बस 2 मिनट में पहुंच रहा हूँ। इस कार इंश्योरेंस के चक्कर में पूरा दिन वेस्ट। चलो अभी प्लीज चेक करो।
मैडम मैं प्लम्बर हूँ।
प्लम्बर आया क्या? आने दे।
सर कहाँ हो?
मैडम बस 2 मिनट।
कार इंश्योरेंस चाहिए विदाउट वेटिंग फॉर इंस्पेक्शन? अपलोड फोटो, रिन्यू इंस्टेंटली ऑन फोन पे। टेंशन फ्री इंश्योरेंस।
क्या हुआ चैंपियन?
दिन रात प्रैक्टिस करनी पड़ती है। यहाँ तो रात को स्टेडियम ही बंद हो जाता है।
एक काम करो ना, चेन छोड़ छोड़ के लगाना।
पापा
अब करो दिन रात प्रैक्टिस। चैंपियन।
एक्स्ट्रा सेफ पॉलीकैब ग्रीन वायर आपके सपनों को रखे सेफ।
Indiabulls Housing Finance Limited announces a public issue of secured redeemable NCDs, offering coupon rate of up to 9.80% per annum and additional incentive of 0.25% per annum. Tranche 4 issue is open for subscription. To subscribe, log on to indiabullshomeloans.com. For risk factors and more details, refer to the Tranche 4 prospectus available on the websites of SEBI, Stock Exchange, Company and the lead managers.
Reimagineering brighter futures with smarter steels. ArcelorMittal, Nippon Steel India. Smarter steels, brighter futures.
Welcome back. We got commentary from the Bank of Japan, chief, and it was on expected lines. Perhaps the market is taking some note of that. We've seen a bit of a recovery from the lows on the Nifty. 18,243 is where we are. It's about 30, 40 odd points away from the low of today. Let's see where we go in the second half of trade. But the stock on our radar, as promised, is EPC major KEC International. They've bagged new orders worth nearly 1,300 crore rupees across various businesses. The company's total order intake for this year stands a little over 14,400 crore rupees, which is a 20% jump year on year. So we have with us Vimal Kejriwal, who's the MD and CEO of the company, joining us. Vimal, first up, congratulations on this order inflow. And secondly, just wanted to know how much of this has been factored in when you earlier revised your order inflow guidance for the year from 16,500 to 17,000 to 17,000 to 18,000 crores. I mean, was this order also factored in, or do you think you can up your guidance for this year a little more?
So, Mangalam, good afternoon. If you ask me, frankly, the solar order was not factored into our order book. Okay, others were factored in, but when we release the order intake guidance, then some of them what we have included don't come in. So I'll still stick to my earlier guidance, saying that we'll do our order intake from 18 to 20,000 crores.
Okay, Mr. Kejriwal, hi, welcome to the show. I had a larger sort of question for you because we're towards the year end, and I wanted to get your perspective with regards to how the year has panned out for KEC. Say in terms of order intake, say in terms of margins, there have been a lot of headwinds that we faced, if it wasn't the war or if it wasn't central bank tightening. Was this year in line with your expectations? Do you think that it could have probably been better? Just a brief answer.
So as far as the order intake and new business pipeline is concerned, I think the year has turned out to be better than what we expected, especially on the T&D side. Power grid, we got a lot of orders and Middle East and all that. So if you look at the overall business, new business outlook, it's been much better than what we had expected at the start of the year.
The new business outlook much better than what you had expected. So that's good to know because we did see a lot of headwinds. In Q2, you had spoken about higher receivable from railways, higher inventory levels and higher GST receivables as well. What is the situation right now in Q3? And in that light, what is the outlook on your inventory days?
So as far as our receivables, inventories, all other debtors are concerned, we have been maintaining a position that we will start seeing some improvement. We have had some marginal improvement in Q3, but Q4 is the one where we expect a much larger improvement because some large projects are getting closed, so retention receivables will get released. So we are expecting that our overall, assets and all that current assets will come down by roughly around 500 crores, leading to improvement on our interest costs and borrowings.
All right. And would you be saying the same for your margins as well? Because you've been maintaining that, the second half of this year may not see much movement in the margins. In fact, the first half as well, it was pretty low. The second quarter was sub 4.5% as well. You were targeting double digits by the start of next fiscal. Do you think that will be postponed, or you still maintain that?
So Mangalam, there's no change in the margin perspective, what we had been talking. We expect a slight improvement happening in Q3 and Q4, which should go up by, let's say, 100, 150 basis points. I'm not sure exactly when, but there will definitely be a jump up happening in Q4, by which time we expect that we will close all our old legacy orders, which were at a much lower material cost. And from, I think, next year onwards, we have said that we should be anywhere between 8 to 10% next financial year, starting from Q1.
Okay, starting from Q1, you're expecting 8 to 10% in terms of improvement. You had also guided that maybe in FY23 you will reduce debt by around 500 odd crores. Does that still stand?
100%. I think we are very clear on that, and we have started getting into some inflows already coming in, and projects are heading towards closure where we had some monies which were slow moving. So we are very confident that in Q4 we should reduce our borrowings by 500 crores.
Okay, but what would your target level be in terms of net debt? You would probably come down to around 3,000 odd crores if you do meet that guidance. But what would your target debt level be, and when do you expect to achieve it by?
So I don't think we are looking at too much reduction in debt levels going beyond this, because what's also happening is that with an order book which we have, this year we have guided for a 20% growth, and next year we are talking of at least a 15% growth. So we will need some more debt for our growth, which we expect to come from reducing the existing debt. So what we are looking at is that with the current debt levels, which we're expecting to be in March, at the same levels, we should be able to operate with a much higher revenue of, let's say, 15%, next year.
Okay. Mr. Kejriwal, you get 32% of your orders from the export markets, rest is from the domestic markets. The general conversations that we have been having is export markets have been seeing some pressure. That was in quarter 2. But has that improved in quarter 3? What is the outlook on exports, and are those coming in higher margins for you?
So let me put it in a different way. So there are markets like, let's say, Africa, etc., where there is a clear pressure which we are seeing. But if you look at markets like Middle East, even though crude is at $80, etc., but we are very clearly seeing, in fact, a large amount of our order book for international has come from two markets. One is Middle East, primarily Saudi and UAE, and the second has been the United States. We are seeing a lot of reconstruction of infrastructure happening in the United States. So orders for our Mexico factory as well as from India and Dubai have been coming from the North America, especially United States. The third area where we get orders in international has been, SAARC, which is essentially Bangladesh and Nepal. And these are generally multilateral funded, notwithstanding the problems which we are seeing there. Orders are continuing from these locations also. So for me, fortunately, I don't operate in Europe and some of these countries which have borne the brunt of the war. So I think we are quite happy with what is happening on the international. And this year, specifically, FY23, if you look at it, we'll grow our international business in terms of revenue by at least 40%.
Right. That'll be, great. Mr. Kejriwal, the last question from my end, and this is more strategic in nature. You've always been usually at the forefront when it comes to seeding new categories. I remember a bunch of years ago when we used to ask you what is going to be a growth category for you. You said it was railways. Then until last year, we spoke it was civil. And all these categories are growing at a much faster clip than the overall average of the company, and they're increasing in their contribution to the business as well. Is there any other category that you are seeding right now and you believe can be, say, something like the next railway or next civil?
So there are a couple of things. When I say civil has got various verticals. So like to me, a data center could be a very big category. Today, we are already doing 4 data centers, and there are huge things happening in data centers. Last year, we acquired a company in oil and gas pipelines. The oil and gas business has not done great, much better than what we had expected, but not done great. But now with the war and people talking about self-sufficiency in gas, etc., and with green hydrogen coming in, where you may require pipelines for hydrogen and for ammonia, etc. So towards oil and gas, pipelines will be one business. Data center could be another business, which can become very large. The third one is, if you look at the orders release which we announced today, there's a large order from a solar power. So we had generally given up solar in a way that was too competitive. People were not making money. And then what we realized is that if you look at the green hydrogen targets which our country has fixed, even if you have to achieve 60% of that, we're talking about 300, 400 gigawatts of renewable power being set up. Okay. And I think a week back, the power minister also made a statement about 235,000 crores of T&D set up for solar plants. So to me, I think these two areas, which could be solar and also T&D associated with solar, both of them for green hydrogen, could turn out to be the joker in the pack.
Okay, interesting, Mr. Kejriwal. Let's see how that segment pans out for you going into next year. But thank you very much for joining in and speaking with us. So that's KEC International. That stock is up around 0.6%. Sounding extremely optimistic, actually, going into FY24. They do expect a margin improvement. They're looking to reduce debt by around 500 odd crores. They're expecting around a 40% growth in the international business. And as you mentioned, as Mr. Kejriwal mentioned, solar might be one of the segments of growth going forward as well. Need to take a short break, but technicals on the other side. Stay tuned.
देश का हर अरमान पूरा करे एक नाम श्री राम लाना ले जाना बेचना खरीदना कमाना बचाना सलाह पाना गोरखपुर जोधपुर तिरुपुर एड्डूर गोवा पटना दिल्ली हावड़ा श्री राम के साथ आगे बढ़ना श्री राम फाइनेंस लिमिटेड आपकी प्रगति का साथी।
आग को फैलने से रोकना मुश्किल है पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Elin Electronics Limited, one of the largest fractional horsepower motor manufacturers in India, launches an initial public offering of equity shares of the face value of Rs 5 each in a price band of Rs 234 to Rs 247 per equity share. Bid offer opens on December 20, 2022, closes on December 22, 2022. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead managers, and the stock exchanges.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC. LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
Everyone looks at the world today. At Hyundai, we go beyond with experiences that take us forward. Inspired by our today, we design your tomorrow. Some said electric is the future. We said, why stop there? At Hyundai, we are going beyond mobility, and you are welcome to join us.
फूल वाला, केटरिंग वाला, बैंड वाला, ये लो भाई। बैंड बजेगी पापा। अगर गड़बड़ हुई तो गए पैसे। अरे नहीं रे, बैंक संभाल लेगा। कैसे? मैंने पॉजिटिव पे सिस्टम पे रजिस्टर किया है। बैंक को चेक्स और बेनिफिशियरीज की जानकारी दे दी है। बैंक चेक करेगा, जांच करेगा। डिटेल्स मैच नहीं तो क्लियरेंस नहीं। अच्छा, लाइए मुझे दीजिए। फोटो वाला, लाइट वाला, मंडप वाला। आरबीआई कहता है
जानकार बनिए, सतर्क रहिए।
बिल्कुल सही कह रहे हैं।
Some recovery for the indices continues. The Nifty is a good 50 points off the lows of trade. But interglobe aviation for the broader markets is the one which is literally flying away at the high point of trade for that counter. Perhaps year-end travel picking up and them coming back to their on-time performance leadership is aiding that stock. But there's also the time where we take stock of what's taking place in the F&O space. Well, you know, a bunch of things. The first part is that the index which has been driving the markets higher, the Nifty Bank, has now broken below the 20-day moving average, and this is intraday. So it'll be interesting to see whether we see some recovery above those levels by close or not, because yesterday we went ahead and defended that level, and in fact in the last few trading sessions as well, this level has been being defended. The India VIX has spiked on weakness in markets, so that's telling you that there is some clamor for puts, and that is what's taken place. A lot of the short puts have, been unwinding their positions. 18,400. As the market falls, we've seen 18,400 put riders run for cover. Almost, some contracts, 26, 27 lakh contracts on that unwound. 18,300 put as well as 18,350 put too have seen a fair amount of unwinding of positions. But at the same time, call writers have gotten extremely active too. 18,300 call has seen a fair amount of writing. At the same time, 18,400 call too. So that's telling you that levels upwards of 18,350 to 18,400, 18,500 on the Nifty, which is also the 20-day moving average, will continue to face resistance. But because we're off lows of today's trading session, put writers have gotten extremely active at the 18,100 mark, and there we've seen a fair amount of writing. What does this basically mean? That for now, the Nifty 50-day moving average of 18,103 stands to be an important support to watch out for. So two things I'm watching out for: 18,100 on the Nifty as an important support, and at the same time, Nifty Bank 20-day moving average 43,278. Do we go ahead and cross that? Does that have any technical basis for that? We have Sachidanand Uttekar of Trade Bulls joining us to give us his view too. Sachi, your thoughts?
Good afternoon, Mangalam. Mangalam, I think you've almost covered the entire area. And things that I would like to add in is, if you look at Nifty, we have been on the short side and based on a particular pattern called as broadening formation. Now, the broadening formation is a classic, topping out formation. But eventually, if you look at what happened last week, we saw Nifty, starting a sequence of a lower top, low bottom. If you look at the weekly charts, it was the first time that Nifty closed below its 5-week exponential moving average, which was placed at 18,500. So definitely the texture of the market has changed a bit. We already saw a negative crossover when it comes to 5 and 20-day exponential moving averages, and Nifty now has a fair amount of resistance placed around 18,440. So until unless we don't see a closing about the same, we may not see any revival. So right now, I think whatever opportunity has been displayed by the oversold condition, I think a bounce back is likely, and that particular bounce back should be utilized to create fresh short positions. So we are expecting eventually the Nifty to scale towards 18,060. Fresh short positions are advocated here. Stop loss should be placed at around 18,440 on a closing basis. When it comes to Bank Nifty, again, it has managed to slip below its 20-day exponential moving average as well. But I think 43,000, once it is breached, this is where the weekly 5-week exponential moving average is placed. So definitely, I think it will have a lot of pressure once that particular level is breached. So as of now, we are more confident when it comes to Nifty. But Bank Nifty, I think once that 43,000 mark is again breached, then fresh shorts should be deployed there. The stop loss should be placed at 43,400. From an intraday perspective, we may see a swing towards 42,700, but eventually the positional target is placed around 42,000.
Okay, all right, Sachidanand, thank you so much for joining us. Some recovery in the markets which is underway, so we'll watch out for that. For now, we'll slip into a short break. On the other side, we'll put focus on Shipping Corporation of India. Stock is buzzing in trade today, so we'll get you more details on that. Stay tuned.
यूं ही नहीं मैं बन जाता हूं। कुदरत के कोने कोने से खूबियां खोज लाता हूं। गुणवत्ता की गहराइयों का गोताखोर हूं मैं। कुशलता की कार्यशाला में तराशा जाने वाला हीरा हूं मैं। यूं ही नहीं मैं रजनीगंधा बन जाता हूं।
Bonjour, mon amour, t'es bizarre sous la pluie. En ce jour, on s'est étreint. À notre tour, oh mon amour. Aimer un jour et s'aimer pour toujours. Louis-Philippe Sheen.
Life will test you. It will turn your world upside down. Again. And again. And again. The only way to hit back is to stand up. Stand up every time. And say, I'm not done.
Welcome back. Well, it's definitely a down day for the markets at this point in time. So we have the Nifty, which is down around 0.8%. But a lot of the broader market stocks are managing to buck the trend. So do watch out for a couple of them. FACT from the entire fertilizer pack is up around 8%. We also have a couple of other fertilizer stocks which are buzzing around. Madras Fertilizer would be case in point, 91 rupees for that particular counter today, up around close to 8% in today's trading session. And the other segment which seems to be seeing a little bit of traction on the upside is JK Paper, which is in the entire paper space. So JK Paper is up around 5%. And even something like a Malu Paper Mills is up around significantly up around 17% at this point in time. So that's the kind of day that we have on our hands. But Shipping Corporation of India is buzzing in trade. Bahishta is here to tell us more about why the stock is in focus today.
Well, thanks for that. The big news why the stock is in focus today is because there is a divestment news on the stock which is coming in. The final hearing before the Ministry of Corporate Affairs for obtaining sanction on the demerger has been fixed on the 29th of December. And this is as per the directives of the MCA, which is issued during the hearing, which was held on the 16th of December. There was a delay in the process, though, which was due to a fake complaint which was filed in the name of a union earlier. So that is point number one. The second trigger in the stock is that the company largely operates in the tanker space, but there's a sharp increase in the tanker rates as currently, which have not yet been reflected very well into the results of the company. Also because the company operates on longer term contracts. So whenever there's a renegotiation of these contracts, the benefits would start flowing into the results. Anyways, the biggest stock for this trigger for the stock has been the demerger news. The stock has already rallied by about 60% in the past 6 months. So let's see how it moves again.
All right, okay, SCI and Focus. Bahishta, thank you so much for all those details. For now, we'll slip into a short break. We'll get you an exclusive conversation with Suresh Narayanan, who's the CMD Nestle India, on demand and pricing trends going forward. Stay tuned.
Reimagineering brighter futures with smarter steels. ArcelorMittal, Nippon Steel India. Smarter steels, brighter futures.
देखो 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 नया टीवी देखो aha got the veggies from Chotu shop. He gives the right rate.
Yes, Papa.
Decided 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर, समझ कर, invest कर.
आज तबीयत ठीक नहीं लग रही, तुम ही सब काम निपटा दो ना। अरे टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
Low emission premium plus by Century ProWood.
Why did life test me?
Why did it try to crush me, shake me, break me? Why me? Because it knew if I could take this test, I could take anything and say, that was easy.
Welcome back. Just keep an eye out on a bunch of stocks. We do have a lot of these FMCG stocks actually recovering from the lows. HUL from the front line and has recovered about 0.25% from the lows. And we do have Dabur as well, which from the lower levels has recovered, still sitting with a cut of about 1%. We got to hear from the company's sources, and we get to know that the promoters were the ones who participated in the block deal today. About 1% stake was sold by promoter entities, but that was what the expectation on the street was. The important part, however, is the rationale for them selling stake in the company, and that is where we understand from sources that the promoters have sold stake to fund some of their private ventures. It's public knowledge that Burmans have private businesses which are in the food as well as QSR space. They have Taco Bell, they have Light Bite Foods, etc. And more importantly, we also get to hear from company sources that promoters are unlikely to sell further stake in the company. As a result of which, we are seeing a bit of recovery in the stock from the lows. But the important part is who are the buyers, and that perhaps we will know only once the data is revealed to the exchanges. So for now, what we know is that promoters have sold stake in today's block deal, as the word was on the street. But secondly, they've sold it to fund their private ventures. And importantly, they're unlikely to sell further stake in the company. But let's speak about the FMCG space itself and stick to that. We have comments coming in from Nestlé's Suresh Narayanan, who says that if current downward trends continue, 2023 will be a better year in terms of raw material input costs as well as margins. That's the word coming in from him. Shilpa Ranipeta, our colleague, spoke to Suresh Narayanan.
Look, I think, I would not like to speculate. Honestly, that's not the way in which we run our business. But I think the fact of the matter is, I do hope that the worst is behind us in terms of inflation. And one is seeing that in some parts there is a bit of a softening. That is, at least at the moment, it's showing it. But some parts of it, like for example milks or wheat or a few other commodities, are in fact showing a very firm trend. Right. So on balance, it is a little premature for me to prognosticate on whether it will be an easier year in terms of inflation as compared to 2022. But if some of the trends that are there today, if they continue, then hopefully it will be a better year as compared to the rather unprecedented levels of food inflation that we had in 2022.
The last time you spoke to us, you spoke about how, because of a low base, rural is still growing for you. But, at a more granular level, rural is still hurting because of inflation. I wanted to understand, are you seeing a recovery coming on that front? Or do you think, the second half of the fiscal is when most FMCG companies expect the recovery there? Are you seeing that already happening? And on the same lines, if you could run us through your rural strategy that you have been laying out, how both will play out?
I think the rural strategy has been put to a lot of execution in the last couple of quarters. We have expanded the number of villages that we are distributing in. I think the infrastructure, feet on the ground, are all areas that we have accelerated. We are seeing encouraging results coming out of this endeavor into rural. It is part of a long march, so it is not that there is a definitive end to it. But I still reiterate that the rural footprint for Nestle India is relatively lower as compared to many companies. So therefore, some of the pain that some might be having in terms of shrinking rural demand that they might have faced in the last couple of quarters is not entirely true for me.
Right.
So it continues on the same way.
Right. And before I let you go, one word on your D2C strategy. You launched your own platform, and we're seeing a lot of peers also making acquisitions and investments in several D2C startups. Your strategy on that front, and how's the early response to your D2C platform been?
Look, our D2C has been, at the moment, it is being tested in Delhi NCR. So that is the only geography where we are in. For us, it is more a consumer experience, a uniqueness in terms of what we can offer the consumer, and D2C as a service platform. And not as a revenue generator. So we have not envisaged that D2C is going to be a large revenue generator for us. We still have other channels that will give us substantially higher. But exclusiveness, service platform, and the value adds that we can give as a company in terms of all of these is really the attention and focus that we've got.
And you're not looking at investments or acquisitions of brands, of D2C brands that are already there to bring them on board, because that's a trend that we're in.
Look, we have a fairly strong repertoire of our own brands that can seek resonance and relevance with the target consumers. And at the moment, that is how we would like to approach it.
Okay, so that's the top brass of Nestle talking to CNBC-TV18. We need to take a short break with the news that the Nifty is down around 150 odd points, so no real significant recovery that we've seen. Time for a break. On the other side, commodity segment lined up with Manisha Gupta. Stay tuned.
Volkswagen Tiguan, India's safest SUVW. Volkswagen.
Got trapped? Do not let commissions and incentives lure you into investing in random schemes. Don't believe in false promises. Be careful. After all, it's your own money.
सोच कर, समझ कर, इन्वेस्ट कर।
पुत्रवीर कमाल दिखा अपना, कभी टेबल बन जाता है तो कभी अलमारी।
वीर MDF आम प्लाईवुड से ज्यादा मजबूत, ज्यादा किफायती, दिखे चकाचक, दिखे टकाटक।
Elin Electronics Limited, one of the largest fractional horsepower motor manufacturers in India, launches an initial public offering of equity shares of the face value of ₹5 each in a price band of ₹234 to ₹247 per equity share. Bid offer opens on December 20, 2022, closes on December 22, 2022. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead managers, and the stock exchanges.
Invest once and enjoy guaranteed maturity with life cover with LIC's Dhan Varsha, a single premium plan for your family's security and prosperity.
She wants to live a life without fear. She wants the opportunity to set the highest standards and benchmarks. She wants to be a ceiling breaker, a go-getter, and a change maker. She wants to be the leader of today and tomorrow. CNBC-TV18 takes another very important step to ensure that gender parity becomes an undeniable reality. Where equitable gain, equal participation, infinite growth become the rules, not the exceptions of the game. Making the future truly forward.
HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective.
Presented by HSBC. Industry partner, Vicky. Associate partner, Reliance Industries Limited.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
जिंदगी को दें रफ्तार, शुरू करें इसी त्योहार। खुशियों का सफर
बिताएं साथ मिलकर। त्योहार तभी हो जब अपने साथ हो। SBI के संग इस त्योहार छोटी किश्त से बड़ी खुशियां ले आए। SBI, the banker to every Indian.
Welcome back. Joining us on the show now is Vipul Shah. He's Chairman, Gem and Jewelry Export Promotion Council. Mr. Shah, hi, thank you so much for joining us. First of all, the export numbers itself on a quarter-on-quarter basis, how do you see the data? Because what I saw for the month of October and November clearly was on the positive side.
Yes, good afternoon, Manisha. Nice talking to you. Yes, on compared to all other segments, our exports have been done better for the third quarter, that is October, September, October. So the way currently the trends are, we have been given a target of 45.7 billion from the Ministry of Commerce, and hopefully right now, currently the way things are going, we should be able to complete our target. Just we are waiting and seeing that how this December, Jan, Feb is happening, and hopefully the war in this Ukraine-Russia does not disturb the supply. So that is a little bit challenging, which we need to look at.
And how are your major markets doing, which is primarily US and Middle East and some part China as well? So what market seems to be performing better right now?
See, currently up till now, it was the US market, which is the most dominant market for us. And they had the sales over there has been robust. The Thanksgiving sales were also very nice. And the only thing is the concern is because of rising interest cost and inflation, the retailers over there are just now having a cautious approach. They are not ready to do the stocking part. They want to take it gradually, how the sales are taking place in the month of January for the Valentine Day as such. So there will be little bit of slowdown. It's a very cautious approach, so that is the concern. And at the same time, China, which is another second major market for us, because of that COVID-0 policy, yet things are not opened up to what our expectation, even though there are relaxation, but yet we are not seeing that kind of demand coming from them. So these are the two major markets for us. West, Middle East, and everything. They are as usual. They are doing great. Europe again, it's having their own issues. So hopefully we are more right now currently dependent on the US market, and hopefully China opening up, that should really help our exports.
All right, fair point. That's about the business part of it. But this is that time of the year when you start talking about the budget wish list as well, because this is exactly when those representations are being made as well. And I really want to start with the lab-grown diamonds first, because that really seems to be an outperformer within the space, a new kid on the block as well. And the percentage point in sense of growth has been quite tremendous. Are you expected to hear something on lab-grown diamonds this time around in budget?
Yes, you are right, Manisha. This industry is been growing, and we are one of the leaders as far as the CVD process of the lab-grown diamond is concerned. We will be achieving almost $2 billion of exports as far as this segment is concerned, and there is tremendous growth opportunity for India to grow. Yes, we are expecting to abolish the duty on the seeds of this lab-grown. Hopefully, our request would be looked at, and government should, because the manufacturing seed, which is a very important part for this growing of this lab-grown on the with the CVD process, that will really help and boost the industry for this side.
What are you also expecting on the diamond part of it totally? I mean, import duty is one thing that has been a bit of a concern. Are you expecting a cut on that across sector?
We have already asked for for the reduction on the duty on the gold, silver, which has to be coming down to 4%, which is currently, if you see, it's at 18.5%, and which is not benefiting the exporters as such, and it is also helping illegal practices and as such. So if you would like to see a robust growth, government needs to look into this, which is our long-standing demand, and they have their own issues as well. So let's hope and see something comes out from the budget as far as the duties on the gold and silver is concerned. And as far diamond duty is concerned, yes, we have asked for a diamond impress license, which was abolished in the year 2009, since there was no duty on diamonds as such. But now, since the duty was reinstated in 2012, so with this new beneficiation laws, which is across all the other countries of these mining companies, Botswana and everywhere, so this would really help us if the 10% would be allowed to re-import. because that is a mix which we need to generally do along for the jewelry, where we can supply to our customers as well.
One final question, and this one is on the basic custom duty that you've asked to be increased for gold, silver, platinum, jewelry, etc. What are the numbers there, and what's the impact that it has right now?
The growth we are having overall, things have been very good for us. Means the numbers after the CEPA and this FTA agreement, which has done, our gold exports have gone up. So we are seeing almost 20 to 25% of growth coming from the gold jewelry sector, which is means to the UAE, and we are seeing the growth coming even into Australian market as well.
Okay. All right, Manisha, thanks very much for taking us through that conversation. On that note, it's also a wrap on Halftime Report. Business Lunch will take all the action forward. Stay tuned.